you get paid.
For a brief moment, everything feels fine. You glance at your bank balance and think, okay, this month should be manageable. Then the expenses start landing. Rent or mortgage, car payment, insurance, utilities, a few charges you don't even remember agreeing to. And suddenly, the money that looked solid a week ago already feels thin. You're not overspending wildly. You're not living some luxury lifestyle. You're not blowing money every weekend. Yet, year after year, it still feels like a huge portion of what you earn just disappears. If you've ever wondered, where is all my money actually going over my lifetime? This video is for you. Because here's the uncomfortable reality most people never sit down and calculate. A small group of completely normal, everyday expenses quietly consume an enormous share of your lifetime income. Not in one dramatic moment, but slowly, predictably, almost invisibly. And when you add them up across a 40-year working life, they can easily swallow 40% or more of everything you will ever earn. Not because you're careless, but because the system is built that way. Most financial advice focuses on tiny decisions: coffee, takeout, impulse purchases. But the real damage to your finances doesn't come from hundreds of small choices. It comes from a handful of large, recurring expenses that quietly compound for decades. Before we go any further, we need to call out the lie most of us grow up with. The lie is that if you just make enough good choices, budget harder, stay disciplined, cut small luxuries, you'll naturally keep most of what you earn. But the truth is very different. The system is designed so that a few built-in expenses skim a massive share of your income before you ever experience it as freedom. That's what we're unpacking today. Not to make you feel guilty, but to show you where the real leverage actually is. Let's start with the biggest one: housing. Housing is the single largest expense most people will ever have. Rent or mortgage payments don't just take a bite out of your monthly income. They shape your entire financial trajectory. It's not just the price of housing that matters. It's the percentage of your income it consumes, and how long it consumes it for. Take a simple example. You pay $2,000 a month in rent. That's $24,000 a year. Over 40 years, that's $960,000. Nearly $1 million just to keep a roof over your head. And that assumes rent never rises, which, of course, it does. $100 here, another increase a few years later. None of it feels dramatic in the moment, but over decades, those small increases decide whether you build margin or live under constant pressure. Housing also acts like a financial gravity well. Higher housing almost always pulls other costs up with it. Higher utilities, higher insurance, longer commutes, higher expectations for furniture, decor, and lifestyle. Once housing gets too big, everything else tightens. The key lever isn't never spend on housing. It's keeping housing at a sustainable percentage of income so it doesn't quietly eat your future. Next, transportation. Cars are one of the most underestimated wealth drains in modern life. Not because owning a car is bad, but because the full cost is almost never calculated honestly. A $400 car payment sounds manageable. That's $4,800 a year. Over 40 years, that's $192,000 just for the payment. Now add insurance, fuel, maintenance, repairs, registration, tires. Very quickly, transportation costs climb to $700, $800, sometimes $900 a month. That's $8,000 to $10,000 a year. Over a working lifetime, transportation alone can quietly cost $300,000 to $400,000. And if every raise comes with a car upgrade, that number grows even faster. Cars are sold as freedom. In reality, overbuying transportation locks you into higher fixed costs for decades. Choosing reliable and boring over impressive and financed is one of the most misunderstood wealth decisions people ever make. Now let's talk about the expense most people never fully see. Interest. Credit cards, car loans, student loans, mortgages. Interest is money paid for the privilege of using money early, and over a lifetime it quietly rivals housing in scale. A typical 30-year mortgage often costs as much, or more, in interest as the original loan itself. Credit cards charging 20% interest turn small balances into years of payments. Student loans quietly add tens of thousands of dollars beyond tuition. Interest doesn't just cost money, it steals time. Every dollar paid to interest is a dollar that never becomes savings, investments, or future freedom. In practice, interest functions like a private tax on your future income. The less interest you pay over your life, the more of your earnings you actually get to keep. Next is lifestyle inflation. This one is subtle, and that's exactly why it's dangerous. As income rises, spending rises automatically. A slightly nicer place, a newer car, more convenience, more subscriptions. Most people never consciously decide to raise their fixed costs. They just slowly accept a more expensive baseline as normal. If lifestyle upgrades add just $500 a month to your spending, that's $6,000 a year. Over 40 years, that's $240,000. But the real cost isn't just the money. It's that lifestyle inflation raises your survival cost. You need more income just to feel okay. Losing your job becomes scarier. Taking a pay cut to escape a bad situation feels impossible. Once your burn rate rises, it's incredibly hard to bring it back down without pain. The real cost of lifestyle inflation is lost flexibility. Next, healthcare and insurance gaps. Healthcare costs don't just hit the sick or the elderly. They hit almost everyone eventually. Premiums, deductibles, copays, out-of-pocket surprises. Even with insurance, healthcare costs are volatile, and volatility is poison for financial progress. You can do everything right for years, saving, investing, paying down debt, and one medical event wipes out the progress. Over a lifetime, healthcare can quietly consume hundreds of thousands of dollars. And when people don't have buffers, those costs turn into debt, which feeds straight back into interest. Health problems and money problems amplify each other. Finally, taxes and fees you never question. Income tax, sales tax, property tax, bank fees, late fees, transaction fees. Individually, they feel small or unavoidable. Over decades, they're enormous. A few percent skimmed constantly. A random penalty when timing goes wrong. Ignoring this category makes long-term planning impossible. You don't control the tax system, but you do control how much friction you accept. High-fee products, unnecessary penalties, silent account charges. Small leaks over 40 years sink big ships. Here's the part almost nobody calculates. These 6 expenses don't just add up, they form a system. Housing approaches $1 million. Transportation reaches hundreds of thousands. Interest siphons future wealth. Lifestyle inflation raises survival costs. Healthcare shocks erase progress. Taxes and fees skim constantly. Add them together and 40% of lifetime income disappears before you ever feel wealthy. Not because you failed, but because the system extracts first. The goal isn't to eliminate these expenses. You can't live without housing, transport, healthcare, or taxes. The goal is to manage the biggest ones intentionally. Housing choices, transportation choices, debt strategy, lifestyle baseline. Those are the levers that actually matter. Once you see that, something shifts. You stop blaming yourself. You stop obsessing over tiny fixes. And you start playing the game with your eyes open. If this helped you see where your money really goes, subscribe. This channel exists to explain the systems behind money, not to shame people for struggling inside them. Thanks for watching.